Hey guys, welcome to the Wednesday live stream. I'm Todd Gordon. It's Wednesday, May 1st, and my trusted colleague, associate, Terry Long tells me we had the wrong start time on this. So hopefully you guys found your way in here, but we're going to go anyways. We're doing it live. All right. Welcome. So, guys, May 1st, back from vacation. We did a good week in Florida with the fam. It was relaxing, kind of, as much as kids not sleeping in a new place. 3 kids under 5.5 can be. Anyways, it was good. So, hey, it's May 1st. It's the morning after Apple earnings. We have Fed today. We have non-farm payroll on Friday. So lots going on. I'm expecting a very slow trade here in the first part of the morning. So I'll just take a sec. Any of my members who are in here at Trading Analysis, I just shot the video for the member video this morning. Last night, this office was torn apart. So you guys might notice we have a different look in here. Yeah, we were working hard. Hey, Lance, what's up? Yeah, it's coming together. I'll give you guys see if I can give you a quick tour here. Let me see if I can just do this. I'll give you a different angle here, and then I'll bring Terry in here in 1 second. Production. Okay. And Trading Analysis team, I'm pulling up Slack, so let me know when I screw something up on this production. So yeah, new office is up and it's getting closer. So I here, let me see if I can do this. I took my desk, which was back there, and I put it against this wall. So we've got the Trading Analysis logo up there. I'll see if I can give you a tour here without breaking the camera and screwing this up and without making you seasick by bouncing the camera around. I went to work on the cable management. You got to hide your cables. That's key in a good trading system. You can't have those cables hanging out. So we did that. Going to have kind of a workstation. And if you guys, I recorded a video over here of how I built these tables, all from Home Depot. Super solid tables. I built another one right over here. Like, check this out, watch. And I'll get to the point here quickly. The only reason I'm screwing around like this is because I missed you guys. I was off last week. Watch. You can build these from Home Depot. Watch this. Doesn't even move. So, for Trading Desk guys, I was pricing out what it would take to build, to buy a 6-foot table, and something that can hold some weight to it. And it's like $700-800 for a decent desk. Build these things. These are butcher block tops. You get them from Home Depot. And then I've got these plumbing. Let me show you down here, and I'll get to the point. You've got these plumbing kind of piping here. They just thread on. Things are rock solid. These desks are going to last 100 years. Put a nice stain on there. Actually, I didn't stain. I put a polyurethane coat on there, and now you're good to go. So I'll have a future YouTube video up on how I did those if you guys want to build a good trading desk. So that's what we're doing. We're going to have some employees in here and make it a fun, collaborative, entrepreneurial environment. Back behind me over here is my other business, which is the distillery. We're going to be doing some social media content back there. So kind of promoting the distillery, which, by the way, we have it set up now so you guys can order any of our products online, including the whiskey. That we do a bourbon and we do a rye. So some people have been asking on that. So that's just a quick update on the office, what's going on there. All else is well. So let's bring in Terry here. We'll get back on track. Stop screwing around. Good morning, Sir Terry. How are you?
Good morning, Todd. Welcome back from your vacation. You're looking refreshed.
Thank you. Appreciate it. Terry and Alex did a great job covering the business. Awesome to have a good group of guys who know the market so well and our methodology. And thank you so much for covering while I was away. That was the first time in, I don't know, 7, 8, 9 years I was able to step away with and knowing that the business was under control with guys who knows what's going on. So thank you for doing that.
Yeah, Alex did a yeoman's job of pulling in the macro picture for our members and kept them up to date while you were gone. So glad to have it. Hey, you shaved that beard off. Now I see you growing it back.
Yeah, my wife just said, you look like such a wimp without it. And like, fine. So I was like, all right, it came off, comes back on, so whatever. Maybe it's just going to be like a Nigerian thing, just becomes part of your identity. I don't know.
Well,
and you got that big old nice goatee going there. You got to man up when you're trading. You got to get the facial hair going. You got to get the. All right, whatever. I don't know what I'm talking about. All right. So let's see what else is going on. We have market that's pressing highs. We have the Dow, which is lagging. NASDAQ is through, and the S&P is pretty much right at it. We're into May now, May 1, and what I was looking to do, Terry, is kind of take people through where we've been in prior tests of, let's call it, millennial levels, if that's okay. Is there anything else on the opening that you want to talk about before we dive in here, or just hit it?
Well, nothing pressing.
Okay.
Like you mentioned today, I think is the Fed announcement, and there's much more talk of rate cuts and being dovish. Whether or not any of that's going to happen, it's that's the thing that Alex and I are looking at that may be volatile in the forex markets. So,
could somebody tell me why the markets are pricing in a rate cut with the stock market at all-time highs? Please. Like, somebody explain. I am not smart. I follow the charts. I just do this. We do this simple way of looking at the Elliott wave methodology. How are fundamentalists so smart they're pricing in a rate cut with stocks at all-time highs? Honestly, I'm asking somebody in the chat. Somebody explain this to me.
At the moment, there's no good reason, I think. But I do appreciate the Fed not getting too excited about raising the rates. So, excuse me.
I don't know. The only way they're going to cut rates is they must be watching. The Elliott wave count that foresees a pretty significant correction here. Trump factor, okay, fine. We're going to get they say we're going to get resolution on the Chinese deal one way or another in the next 2 weeks. Zach, I stick to trading analysis. I'm right with you, dude. It just drives me insane. I say this every week, but they say technicals and specifically Elliott wave is subjective. Can you tell me how an economy, I understand we've got slowing growth to some degree, but stocks are the best, the hard red edge of the chart's the best fundamental leading indicator out there, and it's at highs. I don't know. I don't get it. Paolo's weak, Patsy, yeah. I don't know what that means, this browser. Anyways, okay. Nobody of everyone in this, nobody can give me a good answer. That goes to prove my point. Anyways, and I'd say this with love. I don't know. That's why I love that I'm a technical analyst. So guys, we're coming up on not only new highs, but 3,000. So I just wanted to go back and kind of look at where we've been in the past. Just give me a quick mic check, Terry. We okay on audio still? Sounding good?
Sure.
Okay. All right. And Luis, I think that's the only thing. Maybe this is a blow off top before we get a correction. I mean, that's what they must be pricing in, is that we're going to do this, and then they're going to cut rates at some point in the future, and great. They're going to cut rates from an already very low level. What bubble is that going to precipitate down the line, going back to 2003 that precipitated the housing bubble? We're going to cut rates from whatever we are, where are we, 2.5, 2 3/4, whatever? Where are federal? I don't even know where federal funds rate is.
2.25, I believe.
2.25. Great. So we're going to cut them down. What bubble is that going to give us next in 2025?
Well, we do have the highest interest rates in the developed countries,
world,
right?
Yeah.
So
yeah.
that's I think part of that is the spread. And European Union was way behind quantitative easing, almost 2 years behind the U.S. And so they haven't even started. Now they've slowed down, but they haven't even started. You have to excuse my clock.
No problem. But the FX market is going to show that. The FX market's the most dynamic of the four asset classes. And, if you're starting to see a move in FX, then okay, fine. That interest rate differential, maybe the reason the dollar's
trade going on because of that interest rate differential. So you can borrow money where it's cheap and put it where it earns more. And there's a lot of that money movement in the markets right now.
But not really, because the euro isn't moving. I mean, maybe the dollar did not rally because FX was saying there's no way the Fed's going to continue to hike rates, creating that larger separation relative to low rates, to your point.
Mm-hmm.
So I don't know.
Right.
Anyways, back to what actually matters. So let's just go and look at what the market has done on an approach of let's call it a millennial level. I don't know if that's fair to say a millennial level, but a 1,000 handle. I thought this back in 2014 and 15 was very interesting. So let me just put a marker on 2000 here. I think you can just type it in here. Edit properties. 2K. All right, so there was the first, and I found this to be rather discouraging. So on a first approach at 2000, back in here we are in June, July of 14, we fall short. 1989, back off to 1900, attack and trade 2000 through September, and then this was fun. We dropped then down to 1817, so you dropped 10%, more than 10% from the first 2K test. Get back on our horse, rally up, retest again, rally up, retest for about another 5 weeks, then go, then come back. I mean, just the 2K level, holy bananas. I mean, it was defining from July of 14 to July of 16. Yuck. And then you could go even further back, and it's a much less dramatic in terms of range, but a more dramatic in terms of dynamic trend from 1,000. So the first test of 1,000 was back in 98, I think it was, right here. Okay, so in July of 97, we come up, we fall short in October of 97, sell off in November, there's December of 97, and finally we get the 1,000 mark right there.
The dot-com boom.
Yeah. I was trading AOL.
Who all bought JDS Uniphase back then? I don't even think they're still around.
I was trading AOL call options in my dorm room right in here.
Amazon first came out and it went to $400 a share.
Crazy. All right.
I remember them good old days.
Yeah, me too. This is where I first really fell in love with the markets was this. This was, oh my God, 21 years ago. Holy cow. All right, so back to the point. When we finally got 1,000, this was, to Terry's point, this was a ripper. This was a different market. Rallied up to 1140, nice little consolidation up to 1187, and then 98. This must have been long-term capital or Asia
That's
currency?
the Asian. That's
Asian.
the Asian currency
Asian.
crisis.
From the Thai baht. Yep. I think it was the
Yep.
Thai baht that started it. So, but same thing. I mean, then we just did this big double bottom on 1,000 and then rallied up. So both cases of a round number 1,000 have been quite significant over the last 21 years. So what does that mean? Well, let's talk about this, and let me just check the questions. Okay, so there's been something interesting, as I lovingly call them, the mothership, which is Elliott Wave International. Yep, no problem. As we call them, the mothership, Elliott Wave International, we have a tight, close working relationship with. They have just changed the wave count, and I find it very interesting, and I want to discuss this a little bit. I've had discussions with them over the last 6 months, even a year, about this wave count. I don't know if I'm going to get in trouble for saying this, but that's okay. I actually had a phone call with Prector last week, and he indicated that there was a change coming. So I knew before everyone did. Couldn't say anything, sworn to secrecy, but I knew there was a change coming. And it's interesting. I want to show you the count. Hopefully I don't get in trouble for showing it. I will just briefly show some of the highlights of the latest Elliott Wave theorist. Now, what we're talking about is Elliott Wave International. This company's been around for 40 years. Prector is extremely well known. He's maintained a bearish count for a long time, but they've just recently changed, and it's quite interesting. And it kind of goes to show that we might have a series of back and forths here for a while, and I am very much in agreement with it. So this is the count that we've been tracking. In fact, I first started tracking this count back here in November of 18. I have on record that we identified support right into this zone. I could show you if you really want to go back and say, hey, here's how cool we are. I will. I won't. But we did identify support down into the zone, and we've rallied very sharply since. My primary count for a while has been this, which is a contracting triangle. And a contracting triangle, guys, is a series of lower highs and higher lows. 5 swings in a triangle labeled A, B, C, D, and E. This count says that we are, in fact, in a B wave that should find resistance slightly higher. From there, we drop down in C, we do D, we do E. We could still be in a flat. A flat correction is going to have the same implications, just go slightly lower. A flat would be 3 down, 3 up, and 5 down in C, as opposed to ABC down in C. Okay? For all intents and purposes, it doesn't matter that much because we have resistance into the zone around 3,000, and then we're going to get the chop. Based on the analysis that I opened up with you guys, that 2,000 was a chop fest, and 1,000 was not so much of a chop fest. It was, we had a big move, and then we came back and retested a while later. If the test of 2000 back in 2014-15 is going to be any guide, this very well could be the interpretation that we're going to be doing a triangle for the next 2 years. The problem, as Bob pointed out to me, and I'm totally in agreement with this, is this right here is very hard to count as a motive impulsive move. It's very hard to count as a diagonal. It's very hard to count as a motive wave, which means a 5-wave move. This from 2018 of May up to September of 2018, as you get off the weekly down into the daily, you're going to see that it's really tricky to obey the rules and guidelines of Elliott to identify this as a 5-wave move. This is what I'm looking at. Inevitably, what happens is one of these waves, one of the motive waves, which is 1, 3, and 5, breaks down into a 3-wave move, and that just can't happen. So Bob's concern, and I am totally in agreement with this is not motive, but is in fact corrective. Okay? All right. So in the latest issue of Elliott Wave Theorist, and I'm just going to skip ahead and not give away this content. I highly recommend that everyone subscribes, but the highlights are an expanding triangle first occurred back in 1965 into 75. So the stagflationary 70s were encompassed by an expanding triangle, A, B, C, D, and E. Okay, so it's happening again, and if you go back and read your blue book, your Elliott Wave Theorist, which is over there in my other desk, he takes you through it quite thoroughly, and it's very interesting. So thank you very much, Terry. There it is right there. Oh, we should have every time I read it, I
got to be within arm's reach.
Oh my God! Just to prove that I was working. Hold on. Just to prove that I was.
You got a waterproof copy, right?
No, I've just got so many copies it doesn't matter. I actually was rereading it on vacation. Every time I read that book, it just something new comes up. Let me see here. Tweets. I won't spend any more than 10 more seconds on this before I find it. There it is. All right, there's proof. Oh, and then my buddy, this actually turns into something. See, I was actually reading it on vacation. Of course, you got to have the obligatory beer floating next to you. And then my buddy, Brian Shannon, who agreed to be a guest on a coming show. Oh, you see my baby girl? There's Eden right there.
Oh, yeah. She's growing.
She's growing. Brian turned it into a Fibonacci spiral, and I'll get back on. There's Brian Shannon's work. I was texting with him last night, and he was trying to get me to go out to Colorado to go skiing, and I was like, "Yeah, good luck on that," because there's still snow out there. But Brian Shannon's going to be a guest on our future Wednesday live stream. So back to business. This is the count that Elliott Wave team is looking at, and again, I hate to give this content up on the live stream, but this is the concern. This B wave rally to new high. He's got it labeled as WXY. Into the B back in 2018, that solves a big issue, which is right here. Okay, that solves a big issue, and I'm in agreement with this. So what I love about this from a reality point of view, from a trading point of view, is the implications for this count are resistance into this zone into 3,000. And then a significant drop. And he lays out all kinds of unbelievable reasons over the last two issues as to why this change is happening. Basically, an expanding triangle is expanding volatility. And it's not a significant top, but it's calling for a pretty significant decline that completes a fourth wave. And then the fourth wave will give way to a wave 5 move to new highs. Okay? So the era of buy and hold investing, as we've clearly seen since 2017, is over, because if it's a expanding diagonal and this B wave move is in fact corrective, there's going to be a pretty significant drop. It's going to frustrate everyone out of the markets, and then we're going to rally up to new highs, and everyone's going to then say, oh yeah, now we're in the clear, just make a new high in wave 5, and then we drop significantly. Or if this back from 2018 can be squeaked out as a 5, we're not going to get expanding volatility, we're going to get contracting volatility, and you're going to get still a C wave decline, not taking out the 2018 lows, but falling short. And this is kind of more in line with messing around the 3,000 mark vis-a-vis the 2014 and 15 test of 2,000 before the volatility contraction frustrates everyone out of the market because we're not going anywhere. Then we go higher in wave 5, and anybody who thinks they've read a technical analysis book, like, oh look, there's a triangle, buy it, we're going to go up forever. Well, a triangle gives you context in the Elliott wave theory that it's a fourth wave. We have one more push to go, then we have a significant correction coming. So either way, guys, I think it's sideways, and I think it's going to be a trader's market. So I'm incredibly bullish trading for that. I'm bearish mindless trend following on the investment landscape. So that being said, guys, we're pretty long in our stock portfolio. We're sitting on some pretty decent profits. This is live capital. I know I'll have to move this out of the way, out of our heads. We're sitting on some pretty decent profits here. We have mostly in our stock portfolio, we've got about 80% invested. Actually 74%. I've got $26,000 in cash. Once we have a little bit more clarity that we're going to have the final push up, I will add a little bit more. But once that D of the expanding triangle or B of the contracting triangle shows resistance in place, I will scale back this significantly, go to 50% cash. Okay, I'm happy with the portfolio. We've been keeping track with the S&P, actually underperforming a little bit, but we've been doing it with only 75% invested. So I'm very happy with that. I'm trailing by about 150 basis points in the S&P since the inception of this portfolio. But again, we've only, a lot of investment programs have 100% invested, and if that B or D top comes and they're 100% invested, they're going to get hurt. Right, so I'm pretty proud of that. We're at a 6.5% return. S&P's at an 8.4% return, and again, we have only 75% invested, and some of that is in gold and bonds as well. So really, we only have like a 65% allocation to stocks. So I'm fine with that. Okay, so that's that. Let's talk about. Let me just check questions here. We've been talking too much here, so let me just see. How's everyone doing? Losing people? Boring? Can you find your questions? There we go. Mega horn. There you go, Scott. Yeah, it's like a... Yeah, Bob did change. Yep. Go check out the Elliott wave theory. You guys can get it for like $50 a month or whatever, or $50 a year. No, it's very cheap. You guys should definitely get it. Okay, so we have the Fed coming up. What are they supposed to do, Terry? Do you know? Are they just obviously not doing anything? Are they gonna strike a hawkish tone, a dovish tone, or what do you think?
There was an article that said, "Don't be surprised if the Fed announces a rate cut." So I'm kind of with you. I don't believe it. I don't believe that's the right thing to do. I do believe it's the right thing to continue to be dovish, but I'm not. At this point in time, I don't believe we need to hammer the rates. That's just going to throw a big monkey wrench into everything. Now, there was something else the Fed said they were going to do. They were going to start issuing treasuries to the banks in exchange for reserves, and I think this is something new that's never happened before. Alex and I were talking a little bit about it. Personally, I'm unsure what that's really going to do because, with the quantitative easing pushed a large amount of money into the money supply.
Yep.
And it kind of got bottlenecked at the banks because the banks would take on all the risk of issuing that new debt. But now we're starting to see some of that money flowing into the economy, and I think that's why you're seeing the growth. So anyway, did you hear what this issue was, or about the issuing the treasuries? And
I'm going to be just straightforward. I'm so far behind in getting the office set up, coming back from vacation. I'm relying on you guys. Well,
anyway, we'll look into that. I'm not so certain exactly how that's going to impact everything, and we'll see what that does with the money supply.
Is this like TARP, where they're like forced to accept the treasuries? They're being like forced to accept bailout money even if the banks didn't need it? Or is it a voluntary? I don't know. Hey, Alex. No rate cut today. No hawkish, no dovish, neutral stance. This might take for today's Fed. Okay. Alex, sorry we didn't bring you in. Wasn't in time to audio test you. We'll have Alex in on all future webcasts. So, all right, we'll keep an eye out on this. So again, let's talk about stuff that matters. If the Fed were to cut rates, I feel like the market sells off hard because they're like, what? I don't know. who knows? I would bet that the market sells off if they cut rates. So like, what do they know? Why do they feel like with stocks at all-time highs we got to cut rates? I don't know. All right, so here's what we're kind of seeing here in the bonds. 30-year bonds, we are of the belief that so far it's been an ABC drop. It's looking very corrective. Unless we're doing a 1-2, 1-2, I don't think that's going to be the case. I do think we've seen a 5-wave move from the October lows. If you see a 5-wave move, that generally indicates that the trend of this market is up. That being said, a 5-wave move needs to be corrected. We should go back and retest the area of the prior fourth. That's at 143. I do think you might see a little bit of a pullback here in the bond market. Let me get that microphone up. So what's been confirmed by that is we're seeing a lot of strength in the financials. So if we get a push down to 143, 141 area in the treasuries, yields are going to go up, and you're seeing a pretty good response in financials lately. And I've seen this before, where the financials act as a leading indicator to where rates are going. I can't help but get this count out of my mind that we just did a big corrective WXY down, and we've got 1 or A, 2 or B, and a 3 or C move up. 30.64 is a quality of net percent distance traded in wave 1, projected up from 2, and that gives you 30.74 and the XLF. You take a look at some of the financials. Bank of America, JP's had a very strong performance here on the weekly. Same kind of count. If we're doing a 1-2 up, wave 3, equality has already been met at 113.39. A 1.618 is typical for a wave 3, and that's at 124.01. We're at 116. You're at 124. So some of those financials acting well. Bank of America has a very similar looking chart, kind of a nice inverse head and shoulders here. Wave 3, 100% relationship. So net percent distance traveled in 1, which was roughly 22.75 to 29. So 7 as a percent of 22, roughly 1/3. A 1/3 or 33% rally, give or take, puts you at 34.9935. So Bank of America's looking good. So we'll see if the banks continue to respond up, rates up on the back of Fed. We also, as I mentioned, have non-farm payroll coming up. Earnings season, I would say, has been decent to mixed. Google really dropped the ball, but Apple crushed it. I still have a lousy little 50 shares that I've held on to since the last earnings report, where Apple pulled back into wave 4 support. Traded them at 159. I'm still sitting on them. Just a lousy little 50 shares, up $2,500. That's fine. Longer term count, I'm thinking, is something like this, which is a wave 4 move. This was the last earnings report. I bought the pullback in 159, still holding it. Here's my concern in Apple. If the market is going to go into a triangle, so will Apple. Wave 2 was very corrective. It was very directional, as Terry knows. The guideline of alternation suggests that if one correction was directional, the other one should be sideways. So I am very quickly leaning towards that.
Yeah, the other thing I don't like about it is the time series on wave 4 is much shorter than 2, and that's always a red flag for me to think about alternate potential for wave 4 extending further.
Yep, exactly. We have a 4v2 time relationship. Equality, as Terry mentioned, would be October of this year. So the time elapsed in wave 2 would be equal to the current wave 4 in October. If you want to go to a 1.618 relationship, that's going to be in May of 2020.
A year from now.
So very well. So if Apple doesn't maintain the bid here on the earnings, we're gonna open up at 210. I think there was a what am I doing here? Analyze, trade, all products. There was a $9.08 expected move in Apple. We're trading at 211 on a close of 200.67. So we had a pretty good move through the expected move. If we don't hold the bid through 211 here, I'm probably going to cut my long position that I've had since right here on this pullback. What the wave count is, I got to spend a little bit more time on that. Another one that I want to talk about is we have a Twitter position working, and on Tuesdays I do a video with Jeff Kennedy of Elliott Wave International, and we talk about the trades that we're going to do. And he brings a 1 or 2 or 3 Elliott Wave ideas, and I go and execute them with live capital. And I told him I couldn't do it yesterday because I had the office torn apart. And I said, but I just traded Twitter on the long side, and just like, hey, that was going to be my idea. So that's pretty awesome. Twitter's come back. Their earnings were solid. I mean, I think they had like 18% year-over-year growth in revenue. Active users was up. There was a big growth in the U.S. So Twitter's acting well. Fundamentals are strong or improving on top of a good technical picture. So I have a nice wave 1 up, 2, a beautiful wave 3 that breaks down into a nice 5-wave motive impulsive move, corrective move in wave 4, and then heading higher in wave 5. So off of the weekly down to the daily, you're starting to get pretty good action post-triangle through 18 and into 19. So the trade that we put on there, let me just show you that. In Twitter, where's my platform? This is, again, live trade stuff that we put out for our customers. We should also mention the app. Anytime we do a trade here, guys, it goes out on text message, and also we've launched the trading analysis app. So you get a push notification instantly on your phone when we do a trade with specific instructions as to what we've done in the trades. And again, we trade live capital and everything that we do here. So we did a 42.47 call spread in the June monthlies. I paid $1.23 for those guys and sold those guys for $26. So we paid 97 cents for the $5 spread. So you can make about $4 on the spread. Max risk for me is $970 to potentially make $4,000. It's outside of what the markets are expecting on Twitter for the June monthlies, which I think is interesting. The expected move is $4.02 in those June monthlies on top of current price of 40. So the market's only putting you in at 44 at the +1 standard deviation. I think that's kind of a mistake when you look at the post-triangle thrust and the fact that we might be in a motive impulsive move up. I don't think there's going to be a problem getting up to these old highs here even before the June monthlies expire, which is out here. Doesn't that seem like a little bit of a mispricing for you, Terry, or what do you think?
I think that's why we look at Elliott. So yeah, our fib analysis would give us a good target. So one of the members is, how do you determine your entries? And part of that is looking for where we see directional movement, and we'll place our entries appropriately in order to capture a big move, just such as this. So
yeah, that's awesome. Okay. Perfect. There's one more. Well said. There's one more trade I want to look at. Where this was from Jeff. Jeff gave us this trade, which is Canopy Growth, a little 420 for you. So this guy, CGC, and we only have 5 minutes before the open. We've got a 45.52 half call spread. We put this trade back on April 16th. If we look at what's going on here, we've got a little bit of a correction. Jeff brought this one to my attention. Really good trade. We got in right here, and the market's been moving higher. We're looking for the completion of wave 1. As we get off the the 4 hour. Maybe need to get down to something smaller like a 1 hour. Here's what I'm concerned about. Anybody who's in this trade, who's a member, Canopy Growth is now pressing the wave 4 lows at 50 and a quarter, 50, 50, 40, 50, 25. If we get any push below that, you're going to get a wave 4 V2 violation, and there's no reason to stay in this trend or just stay in the trade any longer. So we'll be cutting that trade and containing profits. All right. So that's going to be that. A few of the things I'd like to go over, but boy, it was a long session. It was important to kind of talk about I think where the indexes are going, and talk about the change coming out of the mothership, which I think is awesome. EWI adjusting the wave count. So I think for the future, it's going to be whether it's contracting and expanding, we shall see. But the era of buy and hold is over for a good period of time. So it's important now to obviously hone your chops for the trading, get context from the Elliott Wave principle. That's why we love it so much. And that's about it. I do have CNBC tomorrow. So I'm leaving in the morning, but we'll be back at a decent time. I'm doing Power Lunch and Trading Nation out of the city, so we'll keep you updated there. Terry, what did I forget? Oh, do you want to talk about the app quickly?
Well, the app is for our regular subscribers, and it's a push notification. You'll get almost instantaneous notification on your mobile device of the trade alerts. So if you're interested more in following us, I suggest that you go to tradinganalysis.com/subscriptions and sign up. We've got the stock service, which we call the premier service. We also cover blockchain, and cryptos are definitely on the move right now. Alex and I are bullish right now, and we also cover Forex. So we've got the full slate for you. And if you guys are interested in taking the alerts that we send out, then that's join us right there.
How do you get into the membership, Terry? How does somebody trial it? Under services?
There you go. Yeah, under services.
Services, got it. Okay. Yeah, so trading analysis on the homepage. And if you'd like to take a trial.
We got 14-day trials. If you've not been a member before, we got a 14-day trial discounted for you. You can try out our service, and then if you like it, continue on. We've got a lot of integration with Motive Wave, the software application, the charting package that Todd uses all the time. Yes, we use it heavily, and we are integrated to the point that Todd's charts can be sent out to members live and keep your workspace updated. That's a repository premium subscription service. It saves you a lot of time and effort of having to recreate the wave counts, and also help you if you're still learning how to do your own wave counts. So.
And it's not suppository; it's repository, right? Oh God! The only other trade that was great. Thanks, Terry. The other thing was we are short Tesla. Finally, the 5-wave move. So we'll have to save that for another time. Markets are now open, guys. Good luck trading, and hopefully that was helpful. Put a like if you're watching here. If you hit that little thumbs up, let YouTube know that you're enjoying what we're doing, and I can show you where to do that. Open a new. Let me just show you where to do that. So on YouTube, on any channel, let's see what Joe Rogan's saying today. Joe Rogan's talking about the apocalypse. So if you like the video, hit this little thumbs up right here, right there. And if you would drop a comment question down below, and I try to address as many of those as I can. And guys, we'll leave it there. Thanks so much for checking in with us. We'll be back. We're going to have more guests, a lot more coming up in the show, but we're starting to get a feel for what's happening with this live stream, and hopefully you're enjoying it. So let us know. Thanks. Best of luck.
Thanks for having me on, Todd.
My pleasure. Thanks for joining me.
Have a good day, traders.